Have you ever heard someone say trading is just gambling or you need to be glued to your screen all day to succeed at trading? Well, these are some of the most common myths that hold people back from exploring trading as a potential way to grow their wealth or achieve even financial freedom. But what if I told you that trading can be learned and mastered with the right mindset and strategies? Well, in today's episode of LG Mindset Podcast, we're going to break down the biggest myth about trading and uncover the truth behind the exciting and fast-paced world. So let's dive in. So, trading and gambling may look similar at first glance because both involve risk, but also they're fundamentally different. So, trading is a skill-based activity that requires analysis, discipline, and also strategies, whereas gambling relies purely on just luck. So, a trader that uses tools like, for example, analysis, chart, and patterns and economic data to make informed decisions. A gambler, on the other hand, places bets without any underlying analysis. So, viewing trading as gambling can lead to reckless decisions. So instead, understanding the role of risk management and research can turn trading into a calculated and rewarding endeavor, let's say. So you should really focus on education. Learn about concepts like risk reward ratios or stop loss orders or even trading strategies such as trend following or scalping. Start small and practice with demo accounts. For example, TradingView. It's something I use all the time to also learn about it because you really need to gain confidence before committing with any real money. Because most of my friends that I know that also learn trading, they directly begin with money. And of course, they lose everything. Why do you want to pay something if you don't even know how it works? Because automatically you will lose a lot of money and we don't want this. So you need a lot of money to start trading. Well, in the past, trading was mostly limited to institutions or wealthy individuals, but today anyone can start trading with as little as even $50 or even less. So it is also thanks to low-cost trading platforms and fractional shares. For example, platforms like eToro or even Webpool or even TradingView make it very easy for beginners to trade small accounts in markets like Forex, stocks, or even cryptocurrencies. That's something I do. So starting small allows you really to gain experience without putting your financial security at risk. You can learn the ropes while building a solid foundation and not lose a lot of money. So open an account on a beginner-friendly trading platform. I did on TradingView, and I think in a few months I also will try eToro because it's really good. And you should also set a budget for your initial trades that you're comfortable losing and focus on learning rather than making big profits right away. You can also do it without really real money. And so you can do it on demo trading. That is also pretty interesting. But again, you really don't need to put a lot of money on it. You can really start very small, but you really need to understand that if you invest this money, you need to be sure that you can also lose it. Something a lot of my friends say is that trading is way too risky. But it's really not, because while trading does involve risk, this risk can really be managed effectively with proper tools and strategies, because if you don't use the right strategies, of course it will be too risky. So the key is really to understand your risk tolerance and having a solid trading plan. This is really important. So for example, diversifying your trades, setting stop loss levels, and never risking more than, for example, 1 or 2% of your trading capital on a single trade can really reduce the impact of losses. Why does it really matter? Because, for example, it really matters because with proper risk management, trading can really complement other financial goals and help you grow your wealth over time. This is what we want. So you should really start by identifying your risk tolerance and financial goals. Use stop loss orders to protect your capital and avoid over leveraging, which can really magnify losses. Oh, something I also hear all the time is you need to be an expert to trade successfully. Do you know which people all the time say this? People who don't really have a clue of trading. Because successful trading doesn't really require a PhD in finances or years of experiences. It's about really consistency, discipline, and sticking to a plan. Many professional traders started with no formal background but succeeded through continuous learning and practice. Strategies like, for example, swing trading and day trading can really be learned step by step. I do, for example, day trading, and that is, since I really stick to a strategy, it has been so easy now. And you have so many tools like, for example, trading simulators and courses that can really help you gain confidence before trading live. I'm sure you can understand. I'm sure it is very easy what I'm telling you, but I think that is really very important because you don't need to do this just, for example, today and then you're like, oh, okay, I'm a pro and stuff. No, I'm not really asking you to do this. I'm asking you to really take your time. For example, it has been I think it has been like 2 or 3 weeks since I am sticking to my strategy for day trading, and I am learning because you cannot learn in 1 week. That is just impossible because every single week, every single month, because the charts will always change. That means that, for example, in the Forex, it will always change. In, for example, cryptocurrencies, for example, BTC, you can see Bitcoin, it's changing all the time, and you cannot really predict all the time the future. That's why it's really important to really stick to a strategy, and you need to see if like in the next 2-3 months it really works, because if it doesn't work 90% of the time, you have a really bad strategy. And that is why it is very important for you to really learn every single day, stay to a strategy for a few months to see if it's a good strategy or not. That's why, yes, you don't need to be an expert to trade successfully, but you also need to have a good strategy. If you don't have it, you know what's going to happen. So trading can make you rich overnight. Well, while it's true that some traders can make significant profits in a short time, these stories are not the exception, not the rule. Okay, really listen to this, because trading is more about consistent growth than instant wealth. Traders like, for example, Paul Tudor Jones or even Ray Dalio achieve success through years and years of discipline, strategy, and really learning from their mistakes, not by chasing quick gains. Unrealistic expectation can really lead to frustration and risky decisions, because how many times have I talked with my friends saying that with trading, the first time you won't make a lot of money. You really need to understand this, because a lot of my friends got really frustrated, mad because they couldn't make money, and it was like they were like, oh my gosh, this is bullshit and stuff. I was like, no, it's not bullshit. It's just because you're not consistent and you're not learning from your mistakes. Because like a slow and steady approach often yields better results over the long term. So you really need to set realistic profits targets and focus on percentage returns rather than dollar amounts. Use tools like, for example, a trading journals. I talked about it so many times. You really should track your progress and learn from each trade. That is what I do, and that has helped me so much to really track my progress and to really learn from my mistakes. Every single time I was doing a mistake, I was like, okay, I did this mistake and I'm writing in my journal, and now what I did is this and this. I understood that next time I won't do this and this. And that is how you understand your mistakes, and that is how you also progress. It takes time, but you really should do this. Trading isn't just for the wealthy, the fearless, or the experts. It's for anyone who's willing to learn, practice, and stay disciplined. By revealing these myths, I hope to really inspire you to take the first steps into the world of trading with confidence, because this has been a really good journey for me. Because you really need to remember that trading is a long journey, not a sprint. Whether you're starting with $50 or even $5K, the principles remain the same: consistency, risk management, and education. If this episode has helped you rethink trading, share it with someone who might need a push to get started. Stay tuned for more insight and strategies in the future episode of Algae Mindset Podcast. Until next time, keep growing and keep trading. Bye!